now. Good evening, everyone. Good evening. Thank you for coming out to the third and final installment of the Keep It in the Family series. Man, to give you a recap, the first week that we did real estate. We had two great speakers, Jeff and Melba. Man, they was just hitting us with all types of great information about real estate, what to look out for. And then I don't want to pat myself in the back, but I was the second person. And I would like to think I did a good job talking about taxes and stuff like that. And what I love about our first two presentations, that it was very engaging. Like, we didn't have people were quiet. And if you ever want real talk, this is the workshop to have real talk, because we're not really here, the presenters, to make us look like, we the smartest people in the world, or we trying to sell you our products directly. We honestly want to help you learn what it takes to maintain, grow, and protect your assets, because a lot of times people only probably do one of the three. Maybe they always spend their life growing the assets, but at the end of the day, we know if you grow assets, the IRS might want their money. If you grow assets, if you live in a particular area, you could grow all the assets in the world, and a rainstorm and a flood, a fire could get rid of it in a second. So we can't disregard all three portions of growing, maintaining, and protecting your assets there. Okay, why is this? Okay, as with always, we want to thank our wonderful sponsors. We want to thank the brothers of the Queens Alumni Chapter, Kappa Alpha Psi Fraternity Incorporated. If you're not, okay, we're doing that. Okay, if you're not in the Greek world, these brothers do absolutely great jobs in the communities, especially in Queens. So, feel free to look at their IG, their website pages, and see, how's ways for you to contribute. They always looking for donations or volunteering opportunities to help out in the community. So just don't think like, oh, if I'm not Greek, I can't, I can't participate. Now, it's a team effort, and these brothers do wonderful jobs in the community. So please look into their website and their IG and their Facebook page and make it happen. Okay, the second sponsor is my company, JS Tax Corporation. I have some of my clients on here right now. Thank you for your support. We are a virtual tax company that could deal with taxes, bookkeeping. We got clients all over the country. We could represent you. We could do consultant. We could do anything that you want except lie and cheat and get you in trouble with the IRS, because I'm too skinny to go. I tell all my clients I'm too skinny to go to jail for you, so I'm not that tax preparer. And the third sponsor, the Boyd Agency, which is located in Queens Village, who just so happens to be the guest speaker, the owner, Garland Boyd. It's an affiliate of Allstate. They can handle all your insurance needs. And I'm one of those people that work there. I'm there Monday through Wednesday. And what I love about this agency is that they honestly do care. And that's one of the reasons why I kind of picked this agency, because they don't treat you like a number and anything like that. And you're going to learn that, the agency owner, he knows this stuff. So listen, guys, definitely look into the Boyd Agency, boyagencyinc.com, and the guest speaker, Garland Boyd. If you want his wonderful digital business card, just text Boyd1 to 3620260, and you can receive his digital card. You don't have to ask for it. It will have all his information, all his services, everything that your heart desires, guys. So listen.
Just one correction.
That's
G-Boyd. G-Boyd1.
Oh, really? It's G-Boyd?
Don't worry, I got that covered. Don't worry about it.
Oh, man.
We'll just ignore that.
I'm slipping. So guys, man, I love that that this is the last workshop of the series, because my eyes has been open the past maybe 5 to 6 months, because I totally disrespected insurance. I'm not gonna lie. That's like the last thing on my mind. It's probably the only thing that's more depressing than taxes sometimes. But as we learn with this wild weather and this unpredictable scenarios, that we need insurance, and our communities are not educated about it. A lot of times our communities, they just feel like, you know what, whoever is the cheapest, I'm just going to roll with it because it doesn't matter. I just got to make sure that, I have it just to do the state requirements. But, like I said, you don't want to grow your assets and maintain your assets in that life life event's going to happen, because it might happen. Most likely it will happen. If you live long enough, something is going to happen. You don't want that to bring you back. You want to bring it to a certain point. Don't treat insurance like it's going to make you a millionaire after your unfortunate incident. It's all about protecting your assets and getting you back to a certain point, guys. So I'm so honored to have Garland Boyd. He has over 30 years of experience, and anybody in the Greek world knows that I'm like that annoying Neo that when you cross, you ask all those stupid questions to your profile, you try to slip them up. It's a learning experience, but you're trying to get them. And I do that every week with Garland. And no matter how wild the situation is, he has the answer to it, which kind of like bugs me out. So if somebody like stumps him today, I'm gonna use it on him on Monday, so I can make myself feel better. But without further ado, I would like to get straight into it. Garland, it is on you.
All right, just caught me typing. Somebody put a great question in the chat, and I'm gonna ask Dirk to hold on to that question because I'm gonna answer that later on. All right. All right, I'm gonna let you, Jamaal, take over all the admitting people in. Let me share my screen. Righty. Boom, 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 boom. Boom. All right. All right. And this is basically just for everyone, just so you'll know, this is the page for, if you go to www.boydagencyinc.com. This is my webpage where you can find all the information you need to know about the agency, everything about us, some of the rewards programs that we have going on, the causes that we do, the concierge, which is basically some businesses that work along with, that we partner with, the products that we have, how you can contact us, as well as getting a quote, as well as it'll take you to my Allstate page. All right, let's go to the next screen. All righty. And this is my contact information. And again, I am Garland Boyd, and I am the agency owner here at the Boyd Agency. The Boyd Agency is located 22209 Jamaica Avenue in Queens Village, New York. The beautiful corner of Queens Village, just before you get into Nassau County. The telephone number here, 718-264-2900. And you can email me. My email information is there. And you also see the Boyd Agency website, as well as you can go to my Allstate website, which is www.allstate.com/Garland Boyd. And also you can text GBoyd1, that's GBoyd1 to 36260. And you'll get my digital business card. Now, why do you want to get my digital business card? Well, I'm going to give you a lot of good reasons. When you download my digital business card onto your home page of your phone, you will be able to contact me. You can refer me. You can access my agency website. You can gain access to allstate.com. You can also download the Allstate mobile app. You can request a quote. You can also get insurance education for milestones in your life, which we're going to talk about later. You can also have access to calculate your monthly car payments if you're sitting at a dealership and you're thinking about getting a car, or even before you go to get that car. You want to calculate, well, what are my payments going to be based on the interest rate that I'm going to get or that I plan to get? You can do that on that digital card that I have. Also, if you're planning on purchasing a home or you want to know if it's better to rent or own, you can do that. Also has a mortgage refi calculator. How much should you be saving for college if you have a newborn? And I'm not going to shout anybody out, but I know some people on here got newborns. So how much should I be putting aside if I want to make sure that my child goes to college? Retirement, which is going to hit everybody on this call. Retirement. How much should you be putting away? There's a calculator for that. How much life insurance do you need? There's a calculator for that. Much, 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 much more. And it's all out there if you download this digital business card. Again, if you text GBoyd1 to 36260, you will get the digital business card. Just a little bit about me. I want to go into, again, I earned my Bachelor's of Science degree in marketing from St. John's University. And while I was there were 9 other achievement-minded young men and myself, and we also became members of Kappa Alpha Psi Fraternity Incorporated. Yo to all the noops that are on the line on April 3rd, 1982. And those 9 young men and I subsequently chartered the New Pi chapter of Kappa Alpha Psi Fraternity Incorporated on March 16th of 1986, while I was the pro-mark of the chapter. I am also an active member, as Jamaal has said, of Queens Alumni Chapter, where I serve as the chapter chaplain, social action chair, and also an executive board member. I have been with Allstate, I feel like all my life. I've been with Allstate for over 34 years, and I've held various leadership positions. My last leadership position that I held was a field sales leader, where I led over 67 Allstate agencies located throughout the metropolitan area, Westchester, Putnam, and Rockland County. My greatest joy when I was in field sales leader was basically hiring and recruiting new talent and assisting them in establishing successful Allstate agencies. I earned the prestigious title of key manager, as well as national conference winner in my tenure as manager. I'm also an ordained elder in African Methodist Episcopal Church, and I serve on the ministerial staff at Mount Briar AME Church in Cambria Heights, New York. I am also the chief operating officer, in addition to my wife and I being facilitators of the marriage enrichment ministry at the church. I'm also the financial wellness ministry leader and a Bible Institute instructor at the church. Gosh, I'm out of breath for all that. Wow, but to do all that. Also, I left management in 2007 to become an agency owner of the Boyd Agency. And the Boyd Agency is an agency of change that helps the local Queens Village community. The Boyd Agency has achieved the prestigious accomplishment of honoring. Our mission here at the agency is simple. It is to be the best and serving our customers by providing peace of mind and enriching the quality of life through our partnerships in the management of the risks that people face every day. All right, and we're going to talk more about that, the risks that people face. I hold licenses to sell property and casualty and life insurance products. I'm also licensed to sell series securities products. I hold an NASD Series 6, 63, 26, and 51 licenses. I'm happily married to my best friend who's on the line, Adrienne Boyd. She's been my wife for 29 years, and together we have a very intelligent, beautiful daughter named Simone, who is pursuing her PhD in clinical psychology from Rutgers University. Whew, I am tired after that big introduction. And I went through that introduction for a reason. We're going to get into that a little bit later, because all of us have an introduction very similar to that. But today, the workshop goals and what we're going to do is we're going to make a very boring topic exciting and interesting. I'm going to do my best to do that. Also, we're going to do an overview of the risks that each and every one of us we face and the insurance that is available to protect you. Also, how to determine, or how do you determine what type of insurance you need. So we're going to talk about that. Also, what do individuals and families need to consider when evaluating coverage options? And lastly, how can you save money on your insurance costs? And I know everybody's going to want to hear about that. How can I save money? Well, let's get into it. All right. And we have a picture there of my favorite team and my team that's been suffering for the last couple of years, but they're going to get back into it. And those are the New York Giants. Now, I went through that long bio for a reason. I gave my bio at the beginning of this presentation because periodically when I do these type of presentations, I have to go into my bio and update it because things change. Things change as you go through your journey of life. When I look back, I talked about in 1986, what I did at St. John's, all right? In 1986, Garland was living at home with his parents. He was young, dumb. I didn't have a care in the world. The 1986 Garland had a future and potential. In 2022, the 2022 Garland still has future, still has a potential. However, it looks a lot different than the future that the 1986 Garland was looking towards. And that's the case for each and every one of us. What we were doing years ago, or what we did 5 years ago, 10 years ago, should look a lot different than what you're looking at today. In 2022, Garland has achieved many goals. In the 2022, Garland is in a different stage of his life, just as each and every person in this call is in a different stage of their life. So why are we looking at this picture of the New York Giants? Well, because right now, the Giants are not in the playoffs, but we are in the middle of the NFL playoffs. So I want to talk for a moment to all the armchair coaches that are out there for a minute. Now, in the playoffs, there are some chances and risks that you will take if you're playing football and you're in the game and the game is started. The first 3 quarters of the game, you're going to take some chances. You're going to do some things to put some points on the board. However, once you put those points up on the board and you're up in the game and you're winning in the game, all right, and you've got the ball and it's the 4th quarter, what you should be looking to do, unlike a team I watched last week who fumbled the ball in the 4th quarter and almost lost it, you want to run out the clock and you want to walk away with a victory, all right? You're not going to throw any Hail Mary passes if you're up. You're not going to be putting it into running back's hands who's fumbled the ball to create a turnover. And I'm going to take the Bill Parcells approach, and I'm going to run out the clock with the ball in my hand in order to win. So what are the takeaways from what I just said here? What are the takeaways? What are the takeaways? One, if the former you has the same insurance coverage in place as the 2022 you, then there's a potential problem that requires some attention. And we're going to talk about that. I want to ask everybody here to think about what quarter are you in when you look at your life? What quarter are you in? Are you in the first quarter, second quarter? Are you at halftime? Are you at the 3rd quarter? Or are you in the 4th quarter trying to run out the clock? Where are you? And wherever you are, whatever quarter you're in, are you executing the right risk strategy for where you are in life right now? And the last thing, most importantly, you see number 10 on the field there? My man, number 10, Mr. Manning, he's the quarterback. So the biggest and most important question I have for everybody tonight is, are you protecting the quarterback? Are you protecting the quarterback? Well, who is the quarterback? Let's talk about that for a moment. Who is the quarterback? Each and every one of us, everybody on this call, the quarterback is you and your family. That's who the quarterback is. It's you and your family. And the question is, are you protecting the quarterback? Now, unlike in football, all right, there is no flag coming out for roughing the passer, all right? Life, just let me say it again, life, L-I-F-E, is going to take you down Lawrence L.T. Taylor style and is going to walk away. Not going to help you up. There's not going to be any flag thrown. Life will take you down. And just like LT ended many a quarterback's career, mayhem, which is that unforeseen risk, will do the same to you if you don't protect the quarterback. I can't stress that anymore tonight, and we're going to talk about that. So the different variety of insurance commercials that we see out there today, and I know we see them all from Geico, Progressive, Liberty Mutual, State Farm, Allstate, you name them, they're all out there. But majority of these commercials that we're seeing out there today are designed to make you just simply click and they're designed to really get the click and shop generation to believe that insurance is simple. That's basically what it's designed. They're designed to do, to make it think that insurance is simple. It's so easy that a caveman can do it. It only takes 15 minutes to save. All right. Those are the messages that are being sent. And you can click and save. You can eliminate the middleman, the agent. But the bottom line is here, are they giving you the strategies that you need to protect the quarterback? All right. And what are the risks that we all face? What are the risks that we all face? Well, the risks that we all face are right here. Every one of us faces a retirement risk. Each and every one of us is going to retire one day. And the question is, in retirement, are you putting enough away? And are you going to have enough in the event you live too long? Now, many people plan for, some people, not everyone, but many people plan for dying early and things of that nature. But the question is, well, what if you live too long? What if you live to 95? What if you live to 101? Have you planned for that? Do you have enough money that's set aside? Well, what does that have to do with insurance? Well, one of the many of the products that are sold for retirement are insurance products, such as annuities. All right. Also, the other thing that can take down the quarterback is one automobile accident. So, do you have the right automobile insurance? Do you have the right coverages? In the event you're injured in the accident, do you have enough that's going to pay for your medical bills? If you're out of work as a result of being injured in the accident, do you have the right, what is called property or the no-fault coverage to pay for in the event you're injured and you're out of work? Are you only getting, can you live off of $2,000 a month if you're out of work for 7 months or 8 months or a year? All right. Or do you have extended no-fault coverage where you're getting extra money per month to make sure that you have enough to hold you over in the event you're injured in an accident and you're out of work? Do you have enough medical no-fault coverage? Whereas with most automobile policies, they only basic no-fault coverage is only giving you $50,000 in medical coverage. So what happens when that runs out? Many people think, oh, no problem. I've got medical coverage, that'll take over. Wrong. It's not. You have to have the proper medical coverage or no-fault coverage on your automobile policy in order to make sure that your medical bills are covered. Because when you are in an accident in the state of New York, the primary coverage is your automobile coverage. So if you go to the doctor and you check off something else, Blue Cross Blue Shield is going to deny that bill and it's coming back to your automobile coverage. All right, we'll talk more on that. No Medicaid, not Medicaid. Nope, not going to get that either. All right, what is next? Homeowners insurance. One of many times the biggest investment that many people make is their home. Are you properly insured? Shopping around for the cheapest price, yes, that's a great thing. That's a wonderful thing to do. However, I've never, ever had anyone ask me at the time of a fire or at the time of they've had some kind of hurricane damage or something, hey, how much am I paying? No, they want to know, am I covered and do I have enough coverage? Those are the questions that if you're going to ask that question at the time of a loss, you should be asking that question in the beginning when you're talking to an agent and they're going over and developing your package plan to make sure that you have enough coverage for your home. All right. And we'll talk more about that. I'm going to leave open a lot of questions where people can ask a lot of questions on homeowners insurance. But home, do you have the right coverage in the event something happens and you can't live in the home? Do you have coverage where they'll pay for you to live elsewhere? I hate to refer to this horrific incident that happened, but let's look at the incident that happened in the Bronx. All right, we have people who were in a rental facility, and people, again, if they did not have renters insurance, that anything that they had that was damaged in that fire was lost, and now you have to start all over again. Also, many people, or most of the people in that facility were displaced. So the question is, who's paying or what's going to pay for me to live elsewhere? If you don't have renters insurance, then all that money is now going to come out of your pocket in addition to the loss that you just incurred because you've lost everything. Where renters insurance will pay for you to live elsewhere, which would include your food, your basically for you to live wherever you're living until such time that the home or your apartment is made livable again. All right. Umbrella coverage. What is that? That is excess coverage above and beyond your automobile and homeowners insurance that you have. And for some people who have other landlord package policy or other properties, a third or a fourth home, and umbrella coverage is very important. If you have assets to protect, you should have an umbrella policy because God forbid you hit someone or injure someone, let's say in an automobile accident, and that person happens to be a pharmacist or PharmD or what have you, and that person's now injured. They can no longer do the job that they trained for. And now they want to recover for their pain and suffering. You injured someone who was basically making lots of money. Their family is now now not going to be able to receive the income from that accident, or because that person is now injured and they can no longer do what they did. So they want to recover for that, for their pain and suffering. And many times your automobile insurance, it's not enough coverage. So they're coming after all of your assets unless you have an umbrella policy in place that can cover that. So if you have any questions on that, we can talk about an umbrella policy. Disability. All right, everybody plans to die, but nobody plans to be disabled. Now, disability insurance is extremely important. Now, some people have it through their jobs. Many people don't, but disability insurance is another important insurance that's offered. And when we look at some of the statistics on disability, according to the Council of Disability Awareness, the most common reason for short-term disability claims are, ladies will tell you, pregnancy. All right. Also, that's 22% of the claims that are out there. Musculoskeletal disorders affecting the back, spine, knees, hips, shoulders, and other parts of the body. That's about 18% of the claims. Injuries such as fractures, sprains, strains, muscles and ligaments. That's about 11% of the claims that are out there. Also, digestive orders or hernias, also mental health issues, all right? Another thing that is results in a lot of short-term disability claims. And then there is those long-term disability claims. Again, musculoskeletal issues, all right? Back issues. Back can be a plaguing Very serious problem that just doesn't go away. And sometimes it can result in you not working anymore. Cancer, another long-termer. Injuries such as fractures, all right, sprains, strains, muscle ligaments, mental health issues, again, to be a long-term issue. Circulatory, such as heart attacks, strokes, all those things can result in disability. And when you're disabled, you can't work. When you can't work, income stops coming in. And when income stops coming in, you can't invest, you can't save, you can't pay for the things that you do each and every day. You can't pay your mortgage, you can't pay your car note, you can't pay your insurance. Disability will set you back and cause you to lose the things and the assets that you've invested in because now you can't pay for them. All right. Life insurance, devastating. Death is devastating. Death is devastating. Death is inevitable. Death will happen to each and every person that is on this call. That is the facts of life. None of us know when it's going to happen. However, life insurance is the thing that we put in place because when we're gone, we have people who remain who now have to pick up the pieces. And many times the pieces that have to be picked up are financial pieces. We buy a house together, okay? Adrian and I, we bought a house together. We pay a mortgage together. If I'm removed from that equation, now there's one person that's paying that mortgage. Now, if that one salary that's now coming in can't afford to pay the mortgage, Chase Bank is not going to be, you know what? We're really sorry to hear about what happened to Garland. You know what? That's okay. You can forget about it. You don't have to pay the rest of that mortgage. No, they're not going to do that. Your credit card bills, those are not going to stop coming in. They could care less. They're heartless. They're like LT. They can ruin your career. All right. Again, like I said, Lawrence Taylor, life will ruin your career. So if you don't have that coverage in place, that can be devastating to your family, devastating to their future, and devastating to everyone that's affected by your untimely passing. Life insurance, and we'll talk more about that. Long-term care, all right, long-term care. Very important, just as important as life insurance, just as important as disability insurance. It is just as important as all the other things that we've spoken about. Long-term care. None of us can predict what can happen as far as with long-term care, but we do know each and every one of us will age. Some of us have parents that we may be caring for. And sometimes there's situations that may come along where somebody may have Alzheimer's or some debilitating issue that now requires that extra care. And many times we have to work and take care of our family member, and it could be a strain on the person who's doing that. Long-term care helps to pay for those in the event you may need outside help to come in and to care for someone, or you may need to put someone into a facility where they need long-term care because you're unable to do it. Long-term care pays for that. If you don't have that coverage, that is something, if you have established and you've now worked up your all of your investments, and you've worked up all your assets, and you've accumulated all these things, and now you don't have long-term care, and this long-term event has happened in your life, that alone can wipe out many estates that are out there. Because in order to qualify for Medicaid, which somebody had put out there, they asked about Medicaid. In order to qualify for Medicaid, you have to almost be destitute in order to qualify for Medicaid, which is funded or given to you, or you qualify through the state. So you would have to sell off all your assets to almost be destitute, and then you would qualify for the Medicaid that would be given or be you'd be eligible for. And it's really not a lot of money even after you do all that. So again, long-term care basically helps. And anyone who is turning 65 today has almost a 70% chance of needing some type of long-term care services. Women, they usually need long-term care longer. They outlive us, guys. They outlive us. They do. They usually need 3 to 4 years longer than men. 1/3 of today's 65-year-olds may never need long-term care, but 20% will need it for longer than 5 years. All right, they will need it for longer than 5 years. A couple of other things that are out there that I didn't talk about, but also are risks that come after you and the quarterback. Again, landlord package policies. If you have investment properties and they're not properly insured, that can cause a problem. If you're renting and you don't have renter's insurance, and again, the unforeseen mayhem happens, that can affect your assets. It can affect everything for you. Co-ops, condos, if you have a business, all right, and you don't have the right business insurance in place, it can affect your assets and everything that you do. So the proper insurance strategy will give you and your family a force of protection from the risks you face every day. 2 weeks ago, we discussed the myths and realities of real estate. And the American dream is the acquisition of appreciating property. That's basically the American dream, part of it, to accumulate appreciating property or assets. Last week, we discussed how to pay less taxes legally. Now, insurance is the linchpin of all 3 of these specialties. However, insurance is many times treated like the pariah at the party. Why? Because when we look at the very definition of insurance, it's something it's hard to grasp. The definition of insurance is this: it's a practice or an arrangement by which a company or government agency provides a guarantee of compensation, all right, compensation for specified losses, damages, illness, or death in return for payment of premium. So the bottom line is you are paying for something that you really don't see. Chris Rock said you're paying what if, or what if stuff, or what if stuff happens. But what if nothing happens? And that's many times I hear, well, I pay all this insurance and I never ever have a claim, and never ever thing ever happens to me, or this never happened. And you know what I say to that? Be grateful. Be grateful. Be grateful, because you do not want to experience a claim, because a claim is something that changes your life. It basically causes aggravation and inconvenience. Just remember, look at the folks who suffer floods, the people who suffer tornadoes, the people who suffer all type of other damages, or they're now displaced from their home for months at a time. You do not want to go through that. You do not want to go through having your car involved in an accident, and now as a result of that, you're taken away by ambulance, and now you have a broken leg. You do not want to deal with those situations. So be thankful. Be thankful. All right. So I want to talk a little bit about, before we get into question and answers, what are the signs of a great agency? Basically, you should be an agent, or you should have an agency that are problem solvers with solutions and suggestions. You want to get an agent or be with an agency that's honest, one that's a good listener and communicator, one that's proactive and not reactive to certain situations. All right. Also, ones that have great reviews. You can go out and review many of these agencies that are out there, as well as the insurance companies that they represent. You can go out there and review them. You want to know, do these insurance companies that you're involved with or that you're being a part of, do they have enough assets in order to cover you in the event of a catastrophic event? All right, because there are situations, for example, we've had Sandy, where many insurance companies that were here prior to Sandy who are not here. They just couldn't handle all the losses that happened here in New York. So what happens if you're insured with a company that runs out of assets, or they do not have enough money in order to pay all the claims that come in? You know what? If they don't have underinsurance, you're out of luck. And it is that simple. You can get online to sue and try to recover from them. If they don't have enough assets, they just don't have it. You can't get blood from a stone. So you want to make sure that companies that you are being insured with, or you are insuring, you want to make sure they're A-rated, that you want to go out to and make sure that with Moody's, that they're rated and have enough capital in order to be able to pay claims in the event of a catastrophic event. All right. What are some ways that you can reduce your insurance? All right. If you, in regards to life insurance, the ways that you can reduce the price that you pay on life insurance is you got to get it while you're young and get it while you're healthy. As you get older, we're all that much closer to the grave. That's the reality. And as we get older, you know, that engine doesn't start the way it used to in the morning. You know, you get out and, you know, the leg hurts, the arm hurts, or, you know, you develop some kind of condition. You get, you know, you can get diabetes, whatever it is. And now that's a rated event, and that's going to cause your life insurance to be more expensive. All right. So if you're young, healthy, you want to get it right then, and you want to get it while you're young and while you're healthy. If you're older and you haven't gotten it yet, well, it is what it is. You need it, and basically you're going to get as much as you need. All right. Long-term care insurance. Again, that is something that is also rated based on your condition. And with long-term care insurance, there is, and Jamaal will tell you, it is tax deductible based on your age. All right. Some of it, if you're 40 or less, it's a $450 deduction. If you're more than 40 but less than 50, it's an $850 deduction from your taxes based on the premium that you're paying. If you're more than 50, but you're less than 60, you're more than 50, but not older than 60, $1,690 is the deduction. And if you're 60, more than 60, but not over 70, it's about a $4,200, $4,500 deduction. And if you're more than 70, it's a $5,600 deduction. All right. Also, clean up your credit. If your credit is not good, you've got to clean up your credit, because one of the things that you will find with insurance companies, many of them, for your auto, home, and other products, they do take a snapshot of your credit in order to determine your premium. You don't want to jump around from company to company. That hurts you. We'll talk, if anybody has any questions on that, we can talk about why on that. You want to consider higher deductibles. Those are things that will help you save as far as on your automobile, homeowners insurance, on your disability, long-term care. Also, if you have the means to do it, you want to also think about paying your premiums in full, because sometimes many companies offer pay in full discounts. Also, multi-policy discounts. If you have all of your business with one company, many times people have their home one place, their auto another place, they have this one place, that another place. Combine it all with one company, and you can get multi-policy discounts when you have all of your products with one company. You want to maximize on all the discounts that are available to you out there. And when you have a good agent, you can sit down with your agent and ask them about all the discounts that are available to you, and they should be doing a review with you of your policies to make sure you're getting all the discounts. For automobile insurance, you want to take a state approved defensive driving course, and you can sign up to save up to 10% on your insurance for up to 3 years. And you can go onto my website, boydagencyinc.com, and can use the discount code BAD, capital BAD, drive safe, lowercase, to get a $10 off, get $10 off the cost of the class. All right. I know I threw a lot of stuff out there, but I wanted to leave some time for questions and answers, because I know I kind of threw a lot of stuff out there, and I'm sure there's a lot of questions and answers that people want to ask, and so that we can make all the sense of insurance that we can. I'm ready.
All right. I don't know whether or not I want to laugh, cry, or be enlightened, but we needed to hear that. So Derek, let's get straight to it. Do you recommend flood insurance for homeowners for any, in capital letters, properties, or only in flood zones?
Great question. Great question. Now, obviously, if you're in a flood zone, many times you don't have an option. The bank is going to tell you you have to have insurance, and that's going to be that. Sometimes the bank doesn't tell you that, and you're in a flood zone. You should have insurance if you're in a flood zone. However, if you're not in a flood zone, some people say, I don't need insurance. I'm not in a flood zone. I'm going to give you a situation that happened. I had a client where they had a downspout, and their downspout basically dislodged, it turned, and they have a basement, like a window catch in their basement. The water came down, that came down off the roof through the downspout turned, it went into the window that was in the basement. The basement basically flooded from a rain situation. Guess what? That's called surface water. Surface water on your homeowner policy is not covered under your homeowner policy. That is a flood. So that answers your question. Sometimes, yes, you do need to have flood insurance in order to get that type of surface water claim covered underneath your covered. It wouldn't be under your homeowner's policy. It would be under flood policy.
So Garland, we have a lot of questions, so it's going to have to be spitfire, because I know you
Spitfire,
know a lot.
I'm ready, baby.
All right, so
bring them. Bring
this person has a direct message. So I'm not going to say the person name. But basically, she said her long-term care insurance has just been rising like crazy, but she has a fear of changing or canceling it. Life insurance has always gimped her. She pays for decades, and they always find a way to make the policies worthless. It feels like long-term care is going the same way. What are your opinions about that? Is it worth it to have long-term care insurance?
Okay, that is unusual. Long-term care insurance is basically, when you take out long-term care insurance, it's based on the age that you took it out. So long-term care insurance, it's locked in. That's the benefit of taking it out when you're younger. Because if you took it out at 45, whatever that price is at 45, at 95, it's the same price. So your long-term care insurance should not be going up. I don't know why it's going up. That's something you need to talk to take a look at what you really have there, because it may not be long-term care insurance, but it's not supposed to go up because it's locked in. What was the other question?
I think she said whether or not it was worth it or not, but did you answer that question though? Because it sounded like you kind of did.
Yeah, long-term care, it definitely is worth it, because again, the long-term care, there's the older products and the newer products that are out today. The newer products that are out today take into consideration where in the event you don't have a long-term care claim, where now some of the products that are available today, in the event you pass away and never had to use long-term care, the premiums that you paid in will be, there are benefits and functions on those policies I'm just going to mute everybody there, where there are benefits that are on those policies, where if you passed away without using the long-term care, where that the premiums that were paid in will go to your beneficiaries.
Cool, cool. Okay, we have another
Again, it's
one.
getting the right policy. You got to shop around from the right policy that has those features and benefits.
Has contacting COVID affected insurance rates?
Contracting?
Yeah, I guess if he was positive, or does it overall just raising everybody's rates?
No. However, what COVID has done with life insurance is some companies have their underwriting criteria has gotten a little more stringent as a result of COVID, because people who have underlying conditions, the facts are, if you contract COVID, if you have an underlying condition and previous to the vaccine, you had a much higher propensity to pass away than somebody who didn't have any underlying conditions. So those were some of the things that the life insurance underwriters were looking at, and for a period of time, it was harder for a lot of folks to get life insurance if you previously had COVID.
I'm just sick of COVID in general. It just made me depressed. But thank you for the answer. Should term insurance or cash value insurance be purchased?
Okay, that's like, all right, let me try to rephrase this question. All right, that's like asking me, do I like basketball or do I like soccer better?
Oh, it's definitely basketball.
It's your
Okay.
preference. It's a preference. And basically it's a preference, and also it's really based upon your need. What with the cash value in life insurance is basically permanent life insurance. Term is for a specific period of time. It could be 5 years, 10 years, 15, 20, or 30. What should be happening when you are looking into life insurance, somebody should be sitting down with you. They should be fact finding, determining why you need this life insurance, because obviously the reason is for dying, but sometimes you're getting the life insurance for a specific purpose. For example, if you bought a home and you have a 20-year mortgage and you want to pay off, or you want to make sure that that mortgage is covered, but then after the mortgage is covered, you have other life insurance that now you have a mortgage of $500,000, let's say, and now at the end of your mortgage, you pay it off. You don't need that $500,000 in coverage anymore. So you may just need coverage for the other assets or the other things that you need, or your family may need to take care of. So the term insurance would only cover for the periods that you need it. Again, somebody should be sitting down with you, determining what your needs are, because again, just to give a blanket statement, or if anybody gave you a blanket statement, oh, you need just do cash, just do term and invest the rest, run the other direction, because they have no idea what your situation is.
And that's why I always tell people, whether it's not real estate or in taxes, if somebody just say, nah, just do this, but they don't ask you about your unique situation, that person is not for you, because they have to be team you. We said that in every section, team you. And don't worry, there's thousands of other agents that could be team you. So don't feel pressure.
Right. And what you'll find is sometimes is what you.
Ooh. Okay, did I freeze?
And what we find sometimes is you have sometimes many or some agents or agencies that are out there that sometimes they have a certain mindset or a certain belief. Again, you have certain people that just believe, term is it, invest the rest. And some people are into, oh no, you've got to have permanent insurance. Again, it's what is best for your situation. Somebody should be sitting down with you and your family, finding out from you what your situation is, what you do for a living, how much income you have. All of those things should be considered in your life insurance decisions.
Nice. Is umbrella policy insurance necessary? Ooh, that's a general one. Okay.
It's not necessarily necessary depending upon, again, your situation. If you are a person, I just like, okay, if you're a renter, you don't have a lot of assets. Let me rephrase that. You're 1986 Garland, got a car, living at home, don't have a lot. Umbrella's not necessary, because if you hurt someone, you've got nothing to, you got nothing. You really don't have anything. Let's fast forward. If you are someone, you've got an asset, you got home, you got investment properties, you've got 401k, you've got business, and if you hit someone and you don't have enough coverage and you injure them severely and they're looking to recover, if you don't have excess coverage, well, you're going to be paying them the 401k, the anything else that you have. Again, you don't want to leave yourself exposed, basically. You got to protect the quarterback.
Nice. Okay. I saw a couple of, okay. What insurance covers artwork and collectibles?
Great question. Great question. All right. I like that. All right. If you have a property policy, be it a homeowner's insurance policy, a co-op condo, or renter's policy, there are features underneath your policy. And again, now this goes to show the type of agent that you're working with. All right. Because many insurance companies you go to, what they'll do, they'll give you a basic home or co-op or what have you policy, but they don't ask you questions. Some of the questions they need to probe, they should be asking you, for example, do you have artwork? Do you have jewelry or any one piece of jewelry that's in excess of $5,000? Why? Because there are, again, for the artwork, it's appraised, it's something that basically appreciates in value. That you need to make sure that that particular artwork, if you have a piece of art that's $70,000, just throwing out numbers, a $70,000 piece of art, and you're God forbid you have a fire and you have $250,000 in contents insurance, and you have this $70,000 piece of art, that $70,000 piece of art is going to be deducted from the amount of total contents coverage that you have, unless it was scheduled or specifically covered, where now it's outside of the total amount of coverage that you have, and now it's in addition to. So, and again, you want to make sure that that item is covered for the appraised value. Again, with rings, I know we had some ladies that are on the call here. Basically, if you have a diamond ring, the significant other went out and got you a $7,000 diamond ring, all right? And you're swimming in the middle of the ocean, and you come on shore and you look down and you see that ring is gone. Well, if you don't have scheduled personal property and it's not scheduled, then that ring is at the bottom of the ocean and it's gone. If you've scheduled it and it has been insured for the appraised value, then that ring will be replaced like, kind, and quality. All right, you have to get an appraisal and that ring will be replaced. It's insured against all risk. Again, you have to have what's called a special scheduled personal property endorsement on your home, renters, co-op, or condo policy.
Okay, and we have two more final great questions, and then we will end it off. Okay. Oh, and I'm gonna give Jeremy the last question, but the first of the three: what is the benefit to having a landlord policy on a rental property versus a traditional homeowner's policy? CK trying to really give it to you.
Great question.
Dang, CK.
Great question. Great question. Okay. The reason why you want to have that is a landlord's policy, let's distinguish the difference. A homeowner's insurance policy is exactly that, for a homeowner. A landlord package policy is for when you are renting out the property. So with a homeowner's insurance policy, the understanding and the contract that you have with the insurance company is that a homeowner is living in that home. In a landlord package policy, there is situations where you can live in the home, but for the most part, the home or that property is being rented to others. So when you have a landlord situation, God forbid, there is a loss, the first thing the insurance company is going to do is they're going to investigate. So if you have a homeowner's insurance policy, and with that homeowner's insurance policy, you have people who are renting the property, those folks that are in there renting that property are not going to treat that property the same way that a homeowner will. They're not going to mitigate damage the same way a homeowner will. In the event there's something, or a leak or something happening in the house, they're not going to do what's necessary to mitigate the damage like a homeowner will. They're going to get around to it. And it's in violation of the homeowner contract, because the homeowner contract is between the insurance company and saying that there is a homeowner, or that the person who owns the home is living in the home. That's why if you're going to have that property as a landlord and you're going to be renting that property out, you have to have the proper coverage. In addition to that, in the event something happens, and now let's say you kept it as a homeowner policy, and let's say, yeah, you got over and there was a fire or what have you, and basically now those folks that were renting out that property, now they can't live there, all right? But you kept the homeowner policy, now they can't live there. Under your homeowner policy, what you don't get that you would get under a landlord package policy is loss of rental income. So because those folks are not living in the home, you will now get loss of rental income. So you don't get that underneath your homeowner policy, because the assumption is you have the homeowners that are living there.
All right, so I lied because I can't diss Danny. So you got 3 more questions, all right? Because he just asked another question.
Let's go.
All right, so here's another one. Should you periodically have your life insurance policy renewed? Good question.
Periodically have reviewed or renewed?
Reviewed.
Absolutely. And here's why. Great question, Danny. Here's why.
Oh, no, that's Derek. I didn't get to Danny's question yet.
Derek, okay, great question. Absolutely. Just as I opened up and said, 1986, Garland had life insurance. All right. I had a $50,000, or I still have a $50,000 policy that I took out in 1986. However, in 2022, I've got things, I've got bills, I've got expenses. Things change. Your life insurance agent or someone should be getting in touch with you, or you should be getting a mailing every year when your policy renews. That is the time to reach out to your life insurance agent, or they should be reaching out to you periodically. It changes in your life. You have a child, you purchased a new home. Definitely, your life insurance should be reviewed. Absolutely. Those are the milestones that happen in your life that you have to have the reviews of your policy, not just your life, but your home, your auto, everything should be reviewed, honestly.
Nah, and I'm loving that you're asking these questions, because you would think that people will know these, but most people don't. So it's not something to be too ashamed to ask. It's great information to know in order to protect your assets. Danny asks, how often should you get your rings appraised for insurance purposes?
Great question. With your rings, if you should get them appraised, probably I would suggest probably every 5 years or so, just to make sure if they've appraised in value. Then you want to make sure that you have enough coverage for that. Now, the thing is about the appraisal, just to go back. Now, With the most insurance companies, what they will do is, in the event you lose, let's say, a ring, and you have the scheduled personal property for that ring, they will replace it like, kind, and quality. So many times they have connections, the insurance companies, to get diamonds and jewelry at a reduced rate than we do. So they do have that ability to do that. The reason why you would need the appraisal is in the event that item is so I guess so rare that it cannot be replaced, then they would have to cash out. And if they cash out, they're only going to cash out at the appraised value that you have. So that's the importance of making sure that you have your appraisal up to date.
Nice, nice. Okay, now Jeremy, would you like to ask your question verbally because you didn't type it?
Hi, hello, can you
Jeremiah.
hear me?
Jeremiah, I'm just messing up everybody's name. Jeremiah.
Hi, can you hear me?
Yes, sir.
Yes, we can.
Hi, so thank you for the opportunity to talk, and thank you for all the information you gave tonight. I just have a real quick question. I kind of just graduated college, so basically I'm in the boat of the real world adulting. So I saw you, I heard you say something earlier, which was cash. Basically, I guess it meant I had to look it up, and it meant like whole life insurance. And I was just looking it up, and basically it just means essentially you get paid for your life. If you do the whole life insurance, I guess the cash accrues over a while.
Who's that?
But my question, I just saw on it said that there's ways that you can invest that money that you get from your life insurance through the stock market. Could you further elaborate through that, or if you know anything about that?
Yes, absolutely. Hold on one second. Just want to mute everybody.
Yeah, who is that?
Okay. Yes, just to answer your question. All right. So that's basically what you're asking is, let me just make just a slight correction to something you said. With the whole life policy, you don't get paid because you die. Your beneficiaries will get the face value of the insurance. Now, with when you have permanent insurance and you are putting money into and it is growing on the cash value is growing on a tax deferred basis, you can borrow and you can withdraw from that life policy. However, the purpose and reason for that money being in the cash value is to offset the cost of insurance as you get older. So basically, it's taking money when you're younger, extra money, setting it aside. It's growing on a tax deferred basis because the insurance cost when you're 85 is going to be a lot more and you can't afford it. So enable for you to have a locked in steady rate, it takes that money and some of the money that's grown on a tax deferred basis over time, it offsets the cost of that insurance. So that's the purpose of the cash value. Now, if it has performed well, then yes, you can borrow from it. If you withdraw from it, Jamaal will tell you, is a taxable event. So you will pay taxes on that. And now your question about the investing in the stock market, and again, as opposed to term insurance, again, that is an option. Again, it is something an agent should sit down with you and see what is best for you. But what you have to remember with term insurance and investing the rest, term insurance is going to come to an end. So if you don't plan to live past 75, then maybe that's a good thing for you. But if you plan to live to 76, it may not be a good thing to get term insurance because you're going to need it at 76.
Nice, nice. And you know what? I wanted to say something after the ring insurance. I remember like I said, I always try to stump Boyd. And I had a conversation. I said, listen, my wife ring is not insured. Do you think that'd be a good anniversary or birthday gift. And he was like, nah. So he had to hit me with some marital advice on not making it a gift. So don't be like me and don't try to give your wife or significant other insurance on a ring as a gift. Learn from Boyd. He's been married for a lot of years. But Boyd, man, thank you for your information. Great job. Can you give them how to contact you?
Yes, absolutely. Let me, you took away the sharing. I wanted to go back. Can we
Oh
share
no,
with me
you took that.
again?
You took that out. I didn't take that out.
I did. Oh my
Yeah, I
bad.
didn't touch nothing.
Let me go back then. And
Like the
oh,
screen
okay.
started
Maybe I
blinking
didn't.
and it just went out.
Okay. All righty. Oh, really? Okay. Let me see if I can bring it back. Oh, you know what? I think we lost the connection. All right. Okay. Basically, you can contact me. The Boyd Agency, again, 22209 Jamaica Avenue in Queens Village, New York. The telephone number where you can contact us here is 718 264 2900. You can basically reach me by email at garlandboyd@allstate.com. You can also text GBOYD1 to 36260, and you will receive my digital business card. And let me just, before we go, let's make sure I
Jeremiah
can
had a real quick question that you can answer. Is the whole life insurance one-time payment or reoccurring?
whole life insurance is again, it depends on what your financial situation is. With whole life insurance, if you have the ability, you can pay it all up. You can do what's called paid up life insurance. We
God
pay it
bless
all
you.
up in one shot. However, there is a limit as to how much you can pay, because if you pay too much, it will be a taxable event. And as Jamaal told you, or will tell you, basically now that life insurance product is now turned into something else. All right. It's not a life insurance product anymore. So again, there's a limit as to how much you can pay. Now, I will say that those that were back in the 80s, there was folks who were had the means to do this, and when the interest rates were really high, basically they were making a killing, dumping a lot of money into life insurance policies, because that money grew on a tax deferred basis. And
Nice. No.
that's basically where a lot of people were making money at that time, dumping a lot of money into a life insurance products, because you have the fixed and there's also the variable, where the money's going into sub accounts that are invested within the market. So there's a lot of different life insurance products that are out there. Again, you have to sit down with somebody and see what's best for you and what meets your particular situation and circumstance.
You know what I think would be a great workshop one day? I think there's a lot of misconceptions about life insurance, and that could just be a workshop by itself. But that's for a future idea, future date. But listen, guys, man, we want to thank all presenters that presented. What I love is that everybody kept it real. We gave out great information. You guys asked great questions. Let's not disregard, because I always feel like if you keep your questions to yourself, you're hurting the group, right? Because you could be helping someone else that may be too scared to answer that. So I definitely want to thank the people that asked the wonderful questions. Thank you to the sponsor, QA Bros. Thank you. Continue doing great work. Boy, continue educating us and providing great service with insurance products. I'm going to try to be the best tax accountant insurance person I could possibly be. But listen, guys, what we're going to try to do, we're going to try to give you a recorded copy of this. I probably will most likely post it on YouTube, maybe sometime in February, to give people the opportunity that maybe wasn't able to see this, to look at it on a future date. And also, don't be selfish. If you felt like this was a great presentation and you know it's going to be posted in February, I will give you emails. Forward it to your family and friends. If you feel comfortable with any of the presenters and you say, you know what, I'm unsure about my insurance, you got Garland's Boyd information. If you for some odd reason you don't have it, just text or email on us and we give it to y'all. So listen, guys, man, God willing, we was a blessing to your lives and to the community. Always feel free to contact us and have a great night, guys.
All right. Good night to everyone.
Good night. Great job, Garland.